50K to 500K trading challenge presentation. Now, as Simon just said, it encourages people to ask questions. By all means, do ask questions. But I'm going to go through this presentation first of all. If something may catch my eye, but in the main, I've got a lot of material to get through, and I'd rather take the questions at the end. So don't think I'm ignoring you. By all means, ask the question again. If I haven't answered your question, I'm not ignoring you. Whilst I'm in the middle of the presentation, I'm not necessarily looking at that chat box, that question box. But anyway, this presentation here this evening is actually a bit of two things actually. I gave what really was a teaser presentation around the clock last week, but I also know that there's a number of people here this evening who didn't get to see that. So what I've done is I've put amalgamated the two presentations into one. So for those of you that did see that presentation last week, you're going to see a little bit of that information again, and then we go into the next stage of this presentation. So if you start off watching this thinking, oh, I think I've already seen this, you've only seen the beginning. There's a lot more to this evening's presentation. Okay, so let's get started. Now, Simon is always very kind in what he says about me, but I appreciate that not everybody does know who I am. I'm not going to spend a lot of time on that. I'm just going to say a little bit about me individually. I've been trading roughly 19 years, and so started out, like many people, trading on the side for my career, and then went full-time trading back in late 2001. But by late 2002, Kim mentioned earlier on, Simon mentioned earlier on, Kim Watson and myself decided to set up Ezeetrader, as it was back then, because essentially I was a bit bored of just sitting in front of a screen and with a lack of interaction, and that was a big thing for me that I didn't realize. It was quite a culture shock going from a busy career to then just sitting in front of a screen, and then you think, oh, actually, I feel I need to be doing other things as well. So we started Ezeetrader, and it started out just as something to do. We were writing an investment and trading newsletter back then, and then as technology grew and customer demand came along, because we've always grown pretty much organically, then other things and services came about as technology grew. Anyway, I've always enjoyed live trading at shows. I've live traded at World Money Show, Trader Expos, the London Forex Show, London Investor Show, you name it. I always prefer, if I can, trade live when I'm at shows, because I always prefer to show people what I'm seeing and what I'm doing, so that you can see me pitting my wits against the market in real time, as opposed to just delivering a presentation with a load of slides. So in the main, that's what I prefer to do. But obviously, there's some times when you have to deliver a presentation as well. With that being said, I'm 4 years undefeated at the London Forex Show live trade-off, and so what I'm always trying to do is show people that I'm the real deal and that I trade live and happy to trade live in front of people. Some of you may have known me from the BBC Traders Millions by the Minute program. You may have seen that. That was probably 2 or 3 years ago that was out now, but I still to this day get people saying, oh yeah, I've heard about you because I saw it on YouTube or whatever. Yes, that was an interesting exercise. They got in touch because I was doing a live trade-off, funnily enough, at the time. And so they wanted to film that, and that's how that all came about. Ironically, they filmed it, but they never put it into the program because they wanted to present me as more of a home-based trader and less of a professional trader. So that's how they wanted to depict it. But anyway, that was what happened there. I have got another trading documentary in the pipeline. I quite like doing that sort of stuff. It feeds my ego a little bit, you know, that need to want to show people what I do, and so I quite like doing that. Yes, Simon has already mentioned I did a 10K to 100K trading challenge, which started in 2013. And ran it to the beginning of 2016. So it actually took about 2.5 years to get there in the end. I was trying to do it in 2 years, though that was the plan, but it actually took a little bit longer than that. And I think that was a good thing because it showed people that it was real and that I didn't get to the 100K within 2 years. I actually took a little bit longer than that. So, but nevertheless, I still got to the 100K just around about 2.5 years. So again, I've already done that challenge, and it was quite. It was a big thing. It's a lot of pressure to do these sorts of challenges, and So people say, well, why would you do it again? Yeah, I think I'm just a sucker for doing these things, because I do think this is the best way to show people, what you do. And for me, that previous challenge, although it was quite a big pressure, and by the end of it last year, it was quite a relief to have it all done, because you're constantly thinking, right, okay, I've got to deliver some performance here, because I've got people with high expectations of me, and I've got to do an update. And so, because I regularly do update webinars on that challenge, and so by the end of it, it was quite a relief to think, okay, I don't have to do that anymore. I can just trade a bit more relaxed. But then after 6 months, I started getting itchy feet again and thinking, well, maybe I wouldn't mind doing some sort of other challenge. So that's where this current challenge came from. And that's what this is what we're about tonight. So I'm going to be talking to you this evening about that challenge and how my approach, how I'm going to do it, and therefore how you can approach these sorts of things. Or you might just take a few snippets of information and say, do you know what? I've spent an hour with Charlie and Simon here tonight, and I've taken that one thing, and that's quite useful for me. And to me, then I've done my job. If someone says, do you know what, I took one thing from what you said tonight, and that was really useful to me, then great, I'm happy with that. I have managed money in the past. I've been FCA regulated, and I'm about to do so again. I laugh because I think people think that, oh yeah, that's where you want to be. You want to be managing other people's money. Not necessarily. It's again, it's another challenge. It's another pressure by having to work for a company managing money. So it's not what it's cracked up to be. I only do it if I'm offered it by someone I know, and so so that's why I've done it previously. And again, at the moment, I've got these. Yeah, it looks like it's all about to be kicked off with another guy. I'm meeting him again next week. So yeah, but I understand that some people want to do that sort of thing. I think anybody can do it. All you've got to do is have a track record. If you've got a track record, the money will find you. And so but yeah, it's not always like, oh, I really want to manage other people's money. It's a lot easier managing your own money, in my mind anyway, but maybe that's just the way I see the markets. So why do it? Yes, good question. Well, firstly, I don't overly like our industry, and what I mean by that is I don't overly like, like a lot of brokers out there. I think there's a lot of dirty brokers, or brokers which are just, they're in it for themselves, aren't they, a lot of the time. And so there's never a complete transparency. So I don't overly like our industry. I don't even like the education industry or parts of it. Obviously, there's some really good guys out there, but there's a lot of, as you guys know, a lot of dross out there on the internet as well. And so I like to do something that most people are unwilling to do, especially in the education side of things. Most people are unwilling to do this type of thing. It gives me some sort of focus, a personal focus, so I quite like that. I like doing challenges, and so I did a physical challenge a few years ago to reduce my body fat and get as muscled up and stuff, like a body transformation thing. I went from whatever it was, 14% body fat down to 3% body fat, and so I quite like having little challenges, and so this gives me a personal focus. But the other thing is, it helps to give others belief, because I know, and I've been there when I started trading, and I still do remember those early years, that I lacked belief at times. You go through a period where you're not making the money that you think you were going to be making, and you think, oh, can I ever do this? Maybe, I don't know if anyone else can do it, because I don't see anyone else showing me anything. And so I've been there. And so I think if I lay it on the line and say to people, this is what I've done. I don't know if I'm even going to get to the 500K just yet. That's the whole point of doing a challenge. You don't know if you're going to. But at least it shows people and hopefully gives them belief to say, do you know what? If he can do it, or he does X amount of that, then surely I can do it as well. Or even if I did, half of that performance, then maybe I could do this as well. And lastly, yeah, why do I do it? I do get significance from it. So I quite enjoy showing off a little bit here and there. And when I have the chance to, I feel like I'm quite good at what I do. So I like to show off my skills. So I get a bit of significance from doing something like this as well. Okay, so Like I said, this is the earlier part of this presentation. This is the first part of this is what I showed just last week at Round the Clock the Trader, and the second part is all brand new to you. So the average trader trades with, I've gone too far there, around about a couple of £1,000 or so in their trading account. Normally I ask the audience, but we've got so much to go through tonight that I'll just answer this question for you. So the average trader trades with £2,000–3,000 in their trading account. So when I did the 10K challenge, I thought, well, that would be nice to show people, something which was tangible to those people that have 2 or 3K in their account. The thing is with doing the 50K challenge is that it becomes less tangible to those people with 2 or 3K in their account, but they can still envisage it, because a lot of people, funnily enough, I've done this over the years, and when I speak to traders, most traders, if they've got 5K, 2, 3K in their account, a lot of them say, when you say, well, what would you like to be trading with? Most of them say 30 to 50K. A lot of them say that. And of course, everyone would love to be trading with £1 million or whatever, but the reality is a lot of people would say, yeah, 30 to 50K, I could do some damage with that. I could, that to me, I could actually make some half-decent gains with, and I could also grow it as well. So that would be a really nice pot to be able to trade with. So that's why I came up with the idea of trading with that 50K. So I've put here, who here got into trading to make a ton of money? Well, I think that's an obvious question, because that's exactly what I did when I got into trading. I wanted to make a load of money, and I read the Market Wizards and a load of the trading books that are out there, and I was motivated by the likes of Paul Tudor Jones and Ed Secota and Michael Marcus. Seeing these guys and what they'd achieved, and with the performance that they'd achieved over those years during the 1980s and still for some of those guys through to today, was phenomenal. So that really motivated me. So I got into trading to make a load of money, not to just stagnate, just trading with a few £1,000s, and just so I wanted to really grow my accounts. I mean, I was lucky enough to start with a reasonable amount of money in my accounts, but I still had to grow them a lot, and so it was important to me to be able to do that. The interesting thing is, I also found what I call a natural level just a few years ago, because when I got into trading, I thought, yeah, I'd love to become a multi-billionaire like someone like Paul Tudor Jones or Ed Secota. I would love to have to just keep growing the amounts and just keep on increasing the position size, and your account keeps on growing at an exponential rate. But the irony is that I got up to a decent amount of money in my trading accounts now, and I found this level where I felt comfortable, and all of a sudden I thought, maybe I don't need to keep pushing it anymore. I'm happy. I found a point where I was happy with the sort of position sizes that I was trading at, and I didn't feel that I needed to become a billionaire from trading. And I think that a lot of people will find they'll go through that. They'll get to a natural level. Some people will get to £30,000 in their trading account to say, do you know what, I can make a nice few £100 a month on this sort of amount. I have a bit of fun with it, and at the end of the year I can make some half decent gains. I'm happy there. And then yet you'll have someone else who might, £100,000 might be where they find a natural level where they say, do you know what, the position size for me at this point I'm very comfortable with. I'm not comfortable with it continuing to grow. So, and so on and so forth. And some people will become, the next maybe Ed Secota or someone like that. But for a lot of us, we will find a natural level, should I say. So although you may set out to become the next Paul Tudor Jones, you may find a level you're happy with. So for me, I'm already at that level. So all I have now is a 10-year plan, and then I'm done. Pretty much. I'm 44 now. So by the time I'm about 54, I'll be looking to ease my way back from Ezeetrader and just trade myself and be sort of semi-retired, really. That's the plan. And so I don't need to be pushing my accounts anymore. I can make a decent income from them, and that's where I'm at. And some of you will be in a similar position, I'm sure, right now anyway, but that's where I'm at. So I'm not interested in exponentially always increasing my, I increase my accounts, but I don't increase my position size anymore. So okay, so the challenge. Oh yes, well firstly let's show you some of the results from that first 10K account challenge, because I just want to show you For those of you who were here last week, again, you've seen this part of the presentation. I'm rushing through this part of the presentation so we can move on. But I also appreciate there's plenty of people here who weren't here last week at this, who saw this stage of the presentation. So this was that original 10K, which started off around about £8,000 actually. We called it a $10,000 to $100,000 challenge because I originally put this all together for an American audience, and that's why it was that was why it was all in dollars. But yeah, if we just flick through these trades back from early 2013, April 2013, what you'll see is a number of trades going through, plenty of losing trades, plenty of winning trades, and that's what I wanted to just show you. And the account balance grows, but then it stagnates for a bit, and then and then all of a sudden it'll jump up again. I'm sure it went from 13,000 to 14,000, then all of a sudden jumped up to 16. And so what I'm trying to get across here is that there is no growth which just goes up in a direct line all of the time. You're going to have periods where it goes sideways, and you're going to have periods of growth, and you're going to have periods of downturns. It's a myth that you're going to just make 5% every month or something like that. So that's why I wanted to show this. These are all the trades that went through. We're into now July of 2013. It got up to 23,000, I see, pulled back to 21, back to 23, to 25 into August, and I think it stagnated there. When I gave this presentation last week, I think it stagnated all the way through to October. And again, you've got to put up with stagnant periods and not just think that you're always going to make money, week on week. It doesn't always work that way. So as you can see, all the way into late September here, still on 25, down to 24 into October. It's trading all the way, trading away, and not making any real monetary gains. And then all of a sudden it breaks out. The equity curve breaks out. And this is where I think a lot of people go wrong, because they'll get frustrated when their accounts going sideways, and then frustration leads to things like over trading, over gearing, or just starting to take trades that a trader wouldn't have otherwise taken previously, and that's how they all of a sudden can go into things like drawdowns when they didn't need to go into drawdown. So that's the main thing here. I think the important thing, and I'll finish here on the account, is that you see plenty of losing trades in here as well. It's not all just winners. You see plenty of losers in there as well. Okay, right, so let's move that off, and I'll just minimize that off my screen so I can then see everything else that's going on. Okay, so I've put what did you notice? I think you've already noticed that there are plenty of losses. So it's not all about winners. I have plenty of losing trades in my trading, but it's all about risk management and risk to reward ratios, really, isn't it? But there also, within that, are some big winners as well. So risk reward. So the account doesn't go up in a straight line. There are flat periods, but these are the realities of trading. Like I've already said, not I make money 5% every month. It doesn't work that way, as we all know. The markets are organic things. They don't allow us to just take whatever monetary amount we want every month on a static linear basis. Some months we can make really good gains, other months we may lose or be flat or make a smaller gain. So it always varies from month to month. And I expect the new challenge to be similar but different. Why do I mean that? Why do I mean I expect the new challenge to be similar but different? Well, the markets have changed. That challenge I started in 2013. We're now in 2017. There's been a few things that have happened in the markets since 2013 which have helped to change them, but markets are always adapting and changing anyway. So as a manual trader, as a discretionary trader, someone who makes their own trading decisions based on strategies but also on top-down analysis, what I found is that the dynamics of the markets change, and they always change from 1 year to another, from one 6-month period to another. So you might go from high volatility to low volatility, high ranges to lower ranges, sideways sort of chop to nice trends. And so you've got to be able to adapt to that. But there's also been some major market events which have helped to change the markets as well. We've had the Swiss National Bank crisis, when the Swiss National Bank removed the peg to the euro, and that created that huge drop funnily enough, I was only talking to my broker yesterday. He took me out for lunch, very kindly of him, and he was talking about a client who had been selling naked options on the Euro Swiss, and at the end of, he had about £300,000 in his trading account, and was happily trading naked for I don't know how many months, bit overgeared, and when it all hit, he owed something like £2.4 million to the market. And so again, I'm not about taking big risks like that. It's about normal trading, managing risk, and not allowing those sorts of things to occur to me. So we've had Brexit, obviously Donald Trump. Anything he says can move the markets. So he is a factor. Obviously, the whole UK scene at the moment is influencing the forex markets as well. And there's a high level of automation as well. Automation at 90%, I hear now. 90% of the markets, the forex markets even now, are automated. But again, that doesn't affect us as manual traders, because does it mean you can't make money? Well, individual traders like us always have one key advantage, and that is that we are small. Even if you're trading with £1 million in your account, 7 figures, the markets are small. You are small relative to the market, so you can just hop in and out. Big funds can't do that sort of thing. But certainly, since the Swiss National Bank crisis, the markets are different. They've become a bit more stagnant. There's not quite the liquidity that there once was. Don't get me wrong, there's still a huge market, the forex markets, but I do see the differences. There's stagnant periods, and then all of a sudden they break up, and then they go stagnant again, and so the markets are slightly different. But a trader like myself has to be able to adapt. And you can't adapt if you have a mechanical approach. I'm very anti a mechanical approach, because I've yet to see a mechanical approach which just works and works and works into the future without having to constantly adapt it. Because that's what a manual trader has to do. We have to constantly adapt. Now, automation doesn't have longevity. City institutions are losing on their automation trading. Ironically enough, I was interviewing someone who consults some of the city institutions and programs for them, and he said, yeah, they said they don't make any money with their artificial intelligence systems, but they keep on trying because they still get all their fees from their clients, so they're getting money anyway. But they're trying to do this because it's a cheaper way than having big trading floors with prop traders and the way it used to be. But they don't make any money from it. But they're constantly hoping that they are going to. But they're too big, and a lot of the time, as soon as they've got an edge, another institution will come up with the same idea. Because you may have a quant analyst in your team who comes up with a great idea, but everyone's privy to the same information out there, and so it's only going to take so long before another quant analyst at another firm is going to come up with a similar idea, and so they end up equaling each other out. And that could be part of why the markets move the way they do right now. But again, to small traders like us, it doesn't really affect us. But certainly, I don't believe that 1 + 1 = 2 in trading. Trading is not that simple. It's not like, oh yes, I'm just going to mechanicalize my trading and just follow a blinkered sort of strategy, because the markets just change. And so a strategy which may have been back tested will not continue to work. It doesn't work that way. They might work for a period, but they just don't continue to work into infinity. So you have to be constantly willing to adapt. And so that's why I'm always so keen to say to people, look, have strategies, but place them in the right context when you're trading. Place them in the right context of the markets. Are we in a trending market, sideways, whatever the market may be doing? Don't just blindly follow a strategy, because otherwise you could get your fingers burnt. Okay, and if the institutions can't get automated trading system to work for long, well, why should individuals? And yet there's plenty of companies out there that would have you believe that their fully automated systems make loads of money. But I doubt that very much. Anyway, like I said, the markets are organic, and so change subtly over time, and an individual trader like us will be able to spot these changes and naturally adapt. Okay, so how does a trader actually achieve this? I am getting to the 50K element very shortly, but this is all part of it. This is all part of my beliefs and what helps influence me as a trader. Firstly, building experience, the old 10,000 hour rule. I think there's no substitute for experience when it comes to trading. Until you've traded through various different market cycles, you can't say that you're an experienced trader. So you have to just put the hours in to an extent. So practice, develop that trader mindset. You have to be able to shrug off losses. You have to also be able to cope with winning phases. People say, well, what do you mean cope with winning phases? Well, you can get overconfidence from a winning phase. But also the flip side, and that can be dangerous, but also the flip side is sometimes on the back of a winning spell, I've met plenty of traders say, oh, they found themselves tighten up and all of a sudden struggle to trade because they don't want to give back their gains, and so therefore they can't get any further. They get stuck. So all of these sorts of things have to come on the back of developing a trader mindset. You've got to have that discipline, you've got to have patience, and obviously risk management. And lastly, you've got to have the market reading skills and strategies. And it's interesting actually that I've put market reading skills and strategies last, not at the beginning, because to me, you can have all the strategies you want, but if you haven't got discipline, the trader mindset and patience and all those things, you won't be able to make any money anyway. And yet people are always trading chasing the holy grail. I know it because I did it as well. I've been there and done it. But trying to find those magic strategies. But there are no secrets in the markets. It's just a case of finding some simple techniques of approaching the markets and then being a little bit fluid with how you adapt those strategies and when you apply them and when you don't. It's a bit like if you're watching Formula One race. Now, Lewis Hamilton, for example, he wouldn't go around Monte Carlo in wet conditions as the same as he would do in dry conditions. He would obviously have to change his approach. Otherwise, he would just end up skidding off the track. And so it's exactly the same with us with trading. We have to be able to adapt our approach depending on what's going on in front of us. So here's how I'm going to map out the challenge. Firstly, the numbers have to be broken down. So it's just too difficult for my brain to process if I don't have targets. To say, oh, 50K into 500K, it just seems so daunting. But so I don't try and focus on the end result. I focus on the process, basically. So I need to make it achievable on a day-to-day basis. So what I've done is I've said, right, in year one, all I want to do is try and make 50K to 70K profit. So if in year one I made 50K, in year two I made 100K, and in year three I made 200K, by the end of year three, then okay, I would have only got to 400,000 if I did that, but in total. But if I can, at the end of that first year, make not 50K but 70K, make a little bit more, then and at the end of year two make 140K, and the end of year three make 280K, then I am going to be getting towards that to that end goal. So that's how I'm structuring it first of all. So all of a sudden, to me, I'm thinking, okay, make 50K in at the end of the first year. Okay, it's 100%. It's a big return, but I think I can crunch that down, and I think I can do that. So by breaking it down becomes easier. So 50K profit is roughly around about £4,000 a month. So aiming for £1,000 a week in the first year, that gives an average of £200 a day. In my brain, £200 a day seems a lot more achievable than if I just said I need to make £50,000. Do you see what I mean? So map it out, break it down, and your brain will be able to process that a lot easier than saying, okay, I need to make £50,000. That's a lot more of a difficult exercise. So assuming a 1% risk per trade, £200 is more than achievable, because if I was risking 1% of the 50K, that's £500. So if I'm risking £500, I should be looking to obviously be making, if I'm on a profitable trade, be making at least £500. So therefore, you could say, well, £200 a day is more than achievable. In fact, I don't even need to risk 1% per trade to achieve this. If you took a typical day trade, now bear with me, not all trades are going to be day trades. It's a split between day trading and swing trading on this challenge, but a typical day trade might have a 25 pip stop with a, let's say, one lot, that contract, then that would mean I'd be risking around about £200. Assuming that I make more than I risk, I'm going to hit that goal, yeah? So I'd be making, if I was risking £200, I should be making at least £200, then I can hit that goal. However, there's a flaw with that, what I've presented there, and I haven't included losses. So let's include losses. So if I factor in losses, then in reality I need to target somewhere between £300 and £400 a day. That seems a lot more a reasonable expectation. So the previous example, I risked around about £200 per trade, so that was about under 0.5% at risk. Now I can either look for bigger winners or increase my stake size in order to be looking to make around about £400 per trade. So that's how I go about doing that. So 1 week typical trades on that basis. Let's say I've had 7 trades, 4 winners, 3 losers. So that's risking £200 to make 400, and then I would be getting to my net goal of around about £1,000. Now obviously all this is hypothetical because some winners are going to be much greater than 400 plus losers are going to be greater than 200, but I just create this framework so I know, for my brain knows roughly what I've got to achieve. So like today, for example, today, funnily enough, is the first day I've actually gone live. No, sorry, it was yesterday. My apologies, I've been on the golf course today. But yesterday was the first day I went live. So I've actually, I'll tell you a little secret, I've hit my first week's target. Yes! It was just coincidence that I managed to do that. So I have hit my first week's target already, and we're only on Wednesday, which is quite fortunate because I was on the golf course today and I'm at Goodwood Festival of Speed tomorrow. So not around too much this week. But again, that's the nature of trading, isn't it? You know, sometimes it comes in clusters, and you're not always going to be around to day trade all the time. I'm not around to day trade all the time, so I have a mixture of day and swing trading. So I've now got a framework. If I can just get my other slides ready so I can see what I'm about to say next, for achieving the challenge. And this is exactly what I did for the previous one. I did exactly the same thing. Build a framework, then as the account grows into the second year, I just double the sizes. Now, could I compound as I go along? Yes, I could do, and I will do. So I won't just keep the same position size as I go through the whole of year one. So at some point, I will start to increase the position size. I'm not someone who increases the position size with every £1,000 that the account grows. I do it I stagger it in stages. So let's say the 50K got to 60 or 70K, then I'd probably say, okay, I'll increase the position size a little bit now. And so that's what I'll do. So that'll help me, hopefully, get beyond that £50,000 profit and get more towards maybe 70,000 at the end of the first year. But if I didn't get to 70 and I still had a 50K profit at the end of the first year, I'd still be happy enough, because I know that as I go through the years, there's usually some bigger trades that come along that give me the opportunity to make some larger gains as well. Okay, so at least I have that framework to work within that on a day-to-day basis feels achievable. £200 a day in year one, £400 a day in year two, and £800 a day in year three. That to me seems achievable, and so I've now got a breakdown here for working with these goals. So how do I go about achieving these goals? Well, it's a combination of day and swing trading. I do believe if you're a day trader, you should do both, really. If you're a swing trader, you can't necessarily day trade, because you might be a swing trader because you are holding down a full-time job. But if you're a day trader, so you are day trading full-time, then I think you should do, because it's good for diversification. I've always found that if I'm having a drawdown on day trading, very often the swing trades might be compensating, and vice versa. Plus, swing trades give the cream, because the swing trades obviously are bigger positions. They are bigger positions than day trades. I risk more on swing trades than I do on day trades. I'll go through that with you in a moment. The other thing that I do is hedging. So there could be situations whereby on a short-term basis I might be long, let's say, euro dollar, but that might be just because I see a short window of, let's say, a day or two, whereby I think I can see a short-term upside move, but longer term I might be short euro dollar. So I'm effectively hedging sometimes across time frames, and so I do quite like doing a little bit of that as well. What markets do I trade? People always say, well, okay, what markets are you going to be trading in order to get through this challenge? Well, I'll tell you right now. So I've put FX, gold, and indices. So the FX markets, and I don't trade a lot of them. I trade 5 of the major currency pairs. So I trade the pound dollar, the euro dollar, the dollar yen, Aussie dollar, and dollar CAD. Those are my sort of top 5 markets. I could trade New Zealand dollar, but I don't even trade that much. I've put down gold and stock indices as well, so I'll swing trade those. But for day trading, I pretty much just FX trade those 5 pairs in FX. And even for swing trading, most of my swing trades are across those 5 FX pairs. But I do trade the occasional major cross pair. So if it's a major currency like yen and euro, I might trade the euro yen, but a lot of the time I don't. Now, that's a personal thing because I've always been a big believer in focus, and I don't like spreading myself too thinly, watching too many markets. And I find that I can get enough swing trades from those markets, but I'm just laying it out there and telling you what I do. It's not like, oh yeah, this is the way that it has to be, because I know there's a lot of people who say, do you know what, I know I like to scan the FX markets pairs. I like to scan like 25 pairs or so and only trade pairs which are doing certain inhabiting certain traits. So I get that, but I like to trade the same ones because I get used to their personalities and I really feel like I get in sync with them a lot of the time. So what types of trades did I take? Because people always say, well, what is it you do? So I take momentum plays. So momentum plays are like what I would call trend-based plays when the markets are all flying up. Like the euro dollar yesterday, for example. Euro dollar yesterday, I got long yesterday morning, just as after Draghi started speaking. That was a pure what I call a momentum play, where the whole of the euro dollar was flying up. My momentum indicators were flying up as well. So then I will look for entry plays, prices to get in, managed to get in, and I'm still running that right now. So I got in yesterday, funny enough, at 112.30, I think, as an average price, and we're now at 113.80, so up about 150 pips, literally, as I'm looking at the charts off screen. So so momentum plays, yes, I love those, but I also like trend pullback plays. So when a market's already had a good run, but then it does a pullback. See, it's all simple stuff, and I also do divergences. That's about it, really. So it's, obviously there's technical aspects to how I trade momentum plays, pullbacks, and divergences, but the concepts are fairly straightforward, what I do. Now, what's more important to me is the psychology. So part of that is, in order to achieve a goal like this, I have to be single-minded. I have to have that extreme focus going on. So to me, I've always been a bit bloody-minded, if to use a marginal swear word, that when I want to be, I can have that very single-mindedness to get what I want, get to where I want to be. When I first started trading, I did have that single-mindedness. Once I'd actually been doing it for a few years, I didn't. When I first started trading, I always thought I was just going to trade on the side for my main career. But then, as I was getting closer to the point where I was getting unhappy with my career and thinking, oh, maybe trading could give me that alternate career, then I really started to focus on it. And so I've always been a bit like that anyway. So to me, focus on a few things and get really good at them rather than try and do too much. So that's one thing that I think I'm good at as far as psychology is concerned. I'm also pretty good at compartmentalizing. So for example, if I was to have a really bad day, Rachel, my wife, wouldn't necessarily know. I say a bad day, I've lost. To me, it's just a losing day if you have a losing day. But let's say I had a larger losing day than I might, than average, let's say. Rachel wouldn't know that I've had a larger losing day than average. Actually, even that's not a good example. Let's say I'm in a drawdown period. Yeah, let's say I'm in a drawdown period. So because a losing day is just a losing day. But let's say I'm having just a tough time trying to make any gains out of the markets. There'll be periods where I just, blimey, I just can't get my head around this market at the moment, and struggling to see what it's doing, and as a result I'm in a drawdown. Well, I'm quite good at compartmentalizing, so I won't carry that any baggage into other aspects of my life. And it's the same within trading as well. I can compartmentalize. When I'm doing something, I will give it that single focusedness, rather than getting distracted with other things. And I do think that's been a strength as well, to be able to do things like that. Like I've already said, I've talked about focus, but focus on the process, not the result. I used an analogy last week of, I think it was Johnny Wilkinson, the rugby player, who, when he was always famous for being so good at kicking, taking the penalties and kicking the rugby ball through the post. If he had have always thought about the end result when he was playing in front of 80,000 people and millions of people watching on the TV and World Cup finals and the likes, if he was always thinking, oh blimey, about I must get this, I must get this penalty, the ball through the over the goalpost, because there's all sorts of consequences of me getting that, then he would have been putting too much pressure on himself, and he would probably more likely fail, because he would be focusing on the end result, not the process. What he was really good at, and what most professionals are really good at, is they're going to focus on, well, what's the position of my leg, what's the angle of my foot, how am I actually going to be striking the ball, how do I strike through the ball, and all those things, and they focus on that. And if they focus on all of that, then the end result will take care of itself. And they know if they do that enough times, then they will have a certain hit rate. It's exactly the same with trading. So focus on the process, not the result. I can't focus on the 500,000 because I'll never get there otherwise. I have to focus on what am I going to do on a day-to-day, week-to-week basis, and not worry about trying to get there. If I do what I'm good at, then the result will take care of itself. Another one is trade without fear of consequence. I'm quite good at that. So I don't always sit there thinking, oh yeah, but what if it fails? And I know that's a typical trader trait, but I'm quite good at, again, at compartmentalizing and saying, well, actually, I'm not even going to think about that sort of thing. If it fails, it fails. It's okay. It's just one trade in the next 30 trades I'm going to take anyway. So why worry about the outcome of one trade? Another thing I don't do once I've started, and I have now started this challenge, is I don't actually look at the account balance. Now, a lot of you will be like, really? No, seriously, I'll look at the account balance probably once every couple of months or so. Is when I'll look at it. Obviously, I do have to look at it. And the reason I don't look at it is because sometimes you look at an account balance and you're at a milestone. So let's say I didn't look at the account balance for a while, and I don't know, let's say it gets to 100K. That's the next major milestone, let's say. And I decide to go and have a look at it, and I'm watching it, and it gets to £99,990. Psychologically, I'm like, great, I'm at 100,000. But what could happen is I'm thinking, oh, great, I want to get above that 100,000 now, but something all of a sudden subconsciously starts to stepping in and stops you from breaching it. You reach a psychological barrier. And I did that with the 10K to 100K challenge. I remember when I got to £44,000, for whatever reason, at £44,000, I couldn't breach it for a while, and then it became a psychological barrier because I knew the account balance was there. So I try not to look at it too often. I have to look at it, obviously, and keep an eye on it. But I know what I'm making on a weekly basis, so I know roughly how I'm getting on. But I do that because I don't want to see the account balance when it's passing through milestone levels, if I can help it. So that's what I do anyway. Maybe it says more about me than anything else, but that is what I do. Obviously, the risk management is important. What sort of risk management do I use? Well, I'll allow myself up to 2% or more, but most of the time 1% will be enough. Now, okay, let's actually go through a little bit more. Why do I need to have the higher risk? Well, day trades I'll mostly keep below 1%. I generally trade a lot lower risk on day trades because you've only got so much time to make a decision on day trades. Plus, there's a lot more noise on day trades. So I like to keep the risk that little bit lower on the day trades. But swings, I've got a lot more time to have analyzed the market and get what I feel to be really in sync with the market. So I'm more likely to build a slightly higher position. And so I've said that I will allow myself that little bit more to to trade. And so when I've said I'll allow myself up to 2% or more, the or more bit is absolute maximum of 5%. Absolute maximum. That's what I did on the last challenge. But most of the time, and same on the last challenge, most of the time I was actually risking less than 1%. But I just like to allow myself the flexibility to be able to increase risk. So that's what I do with risk. So the risk, I'm not taking on massive risk, and a lot of the time the risk, especially on day trading, will be below 1%, and that'll still be enough. But swing trades, I might be at 1 or 2%, and sometimes a little bit more than that. I still, what's that? It's still, okay, there's a typo there. I still believe that experience and the ability to focus are key ingredients to what I do, plus visualization. Not a lot of people do enough visualization. I'm not talking necessarily about sitting down in a dark room for half an hour and shutting your eyes and trying to visualize everything, although that's fine to do. What I do with visualization is I'm constantly mapping out where I think a market's trying to go next, and not next like this minute, but also the next week, the next month, the next 6 months as well. So I spend a lot of time doing that, and that's effectively visualization. So I do think it's really important to visualize yourself executing well as well if you need to do that. And being disciplined and all those sorts of things. So, but I do a lot of visualization because I do think that's important. Most professional sports people do it. I used to have to do it when I was competing. I used to compete in karate for England, and so I did do visualization exercises back then. So maybe it's just part of my DNA. So I have a 3-year plan here. I'm going to be doing regular updates every 4 months. I don't know if hopefully I'll do them with Simon, but about every 4 months. So why not monthly? Why not more regularly than that? Well, again, because it's a lot of pressure, and when you've got to deliver the next update, and oh, it's only 3 weeks away, and what you tend up to do, I found before, is you think, oh, it's only 3 weeks away. Well, I'll trade lightly now because I don't want to give back too much of the profits that I've made previously. I've got a webinar to show. So I like to give myself a little bit of breathing room and to not having to do it every single month. So about every 4 months I'll be doing regular updates. And they're important because those updates will reveal not just the results, but my observations each time on the trading conditions, etc., and how I'm adapting to those markets. So what you've got here this evening is you've got how I'm mapping it all out, and the psychological side of the whole process that I go through there, and where I feel the strengths are in my trading, and that's what allows me to do something like this, right the way through to where we are right now. So there's been a lot we've had to go through. Now, our own members at Ezeetrader can follow these swing trades in our new app, which is actually being released in about a week's time. Actually, I've put 2 weeks there because this presentation was first delivered last Thursday, but they will be able to follow some of the swing trades in that app. And I just want to thank you at this point. I haven't quite finished for listening in, and because I do this to motivate not only myself, because I am motivating myself by doing a challenge like this, but also hopefully I motivate people as well, others out there. I can hopefully motivate you to think, blimey, he's doing that, well, maybe I should do something myself. Funnily enough, there's a trader I know who comes and sees me periodically. He said, Charlie, I want to do a challenge as well. So I've helped him, we've mapped out a plan and set him on the road to doing his own challenge as well. So hopefully it motivates others to think, yeah, what am I doing? I'm trading, with a few £1,000s in my account, and I make a bit of money, but I haven't got any focus. Well, this is the sort of thing that can give you some focus. So I will see you in a few months, but if you would like to use the same strategies and approach that I use, because people always do, they do ask, they say, Charlie, what is it? What are the exact strategies you use? Because, if that's what you're using, I wouldn't mind using that as well. Well, we've got some deals for you, actually, because we've done some discounted deals. If you're interested in day trading, then the link is londoninvestmentweek.com/easyday. If you're interested in swing trading, these are my day trading techniques, and Kim's, my business partners as well. And if you're interested in swing trading, then you can get my swing trading package, and those are the swing trading techniques that I use as well. So you can use that link. And what it'll look like if I bring it up is depending on which link you use, you get £300 off our day trading course, but I think also you can get £300 off our swing trading course. If you want both, you just click through, and once you start putting all your information in, then it will give you the option to then add. So let's say you've said, oh, I want the swing trading course, but I think I'd want the day trading as well. You can you can add the option, and then it gives you an extra discount. It automatically does that. So yeah, so it gives you some information on those pages as well, which you can look through. So that's what it all looks like. So if anyone's sitting there saying, oh, you know what, I like what you're doing, I've seen you do this before, saw you doing the 10K, 100K challenge, I never got around to doing anything, well, here you go. We've done this special deal for Simon, whereby you get £300 off. So anyway, at this stage, let's take some questions. I've not been looking at the questions, so I'm going to bring the question box down now and have a look at it. It's always funny because I can't actually show questions. It won't allow me, but I can see some of the questions, so I'll take a little screenshot so you can see, oh, this is genuine. I'm having to take your names off, but there you go. This is a screenshot of some of the questions. Let's have a look. Hi, do you have an exact plan for every day and month, including money amount? Oh, I think I've already covered that. That must have been a while ago. That was, yeah, it was about 15 minutes ago that question was asked. How long have you been trading the market? Like I covered that one at the beginning, about 19 years. That's Anise answered that, but I didn't want to show all of the names because otherwise people don't want their full names being shown. Charlie, what indicator do you use for momentum plays? That would be within our easy day trading package. If you want to know the specifics of how I trade, you know, that's where you would have to join our community, basically. Sorry I'm late. Can we get a recording? Yes, you can. Yerkin asked that, I think it was. No, that was Anise, right? Okay, again. Internet is bad today. Okay, well, I can't help you with that. Who said internet is bad? That was Anise as well. Right, okay. How to be motivated every day and keep motivation for everyday boring motivation. Okay. Let's get rid of that's the last one I've took of that screenshot. Yerkins asked that. How to be motivated every day and keep motivation for everyday boring motivation. I don't quite understand the question, but well, you're saying how to keep motivated every day. I think the main thing that you asked that yeah, just a couple of minutes ago, Yerkin. The motivation for me is because I'm putting my neck on the line when I'm doing a challenge like this. But if you're talking about generally, so my motivation is there. Plus also, if I grow that 50K into 500, I've got a motivation. That all goes towards my pension, doesn't it? So there's that element as well. But for the average person, how to keep motivated, you've got to set goals. And I think it's important. If you look at any business person, any entrepreneur, they set goals. And in trading, we should do the same thing. So you should set goals, and that helps give you that motivation. So otherwise, what I find is traders can drift, and they enjoy the process. They enjoy trading, but they drift a little bit. They drift, not really making much money because they've not set out a trading plan. They've not got goals set out. And so to stop it from being boring, then yeah, you've got to have a plan. Do you spread bet or CFD your trades, and what brokers do you recommend? By the way, all the best in your new challenge. Thank you, Gary. By the way, I'm happy to answer as many questions here this evening as people like, so I'm quite happy to stay here. We've got plenty of time. I do have a spread bet account for swing trades, but on this challenge account, Gary, it's going to be a spot. It's a forex account, but I also trade futures on that and CFDs, Gary. So, but for the forex trading, which is the majority of the trading that I'm doing, it's a straight forex account. But I do have a spread bet accounts separately. What brokers would I recommend? It's not really what I want to be here to do here this evening, Gary, but I do trade with Saxo. I trade with ETX Capital as well. There are plenty of other brokers. The only thing I'd say about brokers is that for most of you who are in the UK, if you are in the UK, then trade with a UK-based broker. There's no need to go overseas. There's plenty of good brokers in the UK that you can find, and so because you've got the best protections here in the UK. If you're UK resident, then you get the best protections. If you're overseas, then there'll be other brokers which will be applicable to you. Yerkin said, boring routine, I meant. I don't have a boring routine. I get up, I don't sit in front of the charts all day, Yerkin. Although I am a day trader and swing trader, I don't sit in front. It's a myth that people think, oh, you're a day trader, so you sit in front of the charts for 10 hours a day. No, I don't. I get up, I'll have a look at the charts. If there's anything I like, I might put a trade on, or at least know where I might be looking to put a trade on, and then I can get on with other things. Might go down to the gym, I do other things. Like tomorrow I'm at Goodwood Festival of Speed, but I'm always connected. So via my phone, my brokers are on there. I can access my own PC from my phone. So by using TeamViewer, or if you want to use something like Google Remote Desktop, then you can access your computer. So I can access all my charts and I can see them via my phone when I'm out remotely. So I don't have to be glued to my screens the whole time. If I'm out and out day trading, then I need to be around, yes, but I'm not always out and out day trading. Sometimes I'm trading off of, quite often I'm trading off of hourly charts and 4-hourly charts. So it varies. So no, it's not a boring routine at all. Do you think somebody with no experience or of 10,000 hour can do the same challenge? Ali Reza, no, I don't. I don't think that anyone with no experience, if you haven't got any experience, you wouldn't be able to do the same challenge, because trading is one of the toughest businesses to be able to be profitable in, and because there's no other business whereby, or job in the world, or I know of, I can think of anyway, whereby if you have a bad day, not only do you not earn any money, your boss takes money off of you. So psychologically, there's just so many facets from a psychological perspective when it comes to trading that that do make it quite unique. And until you've built up experience and you've developed a thick skin, getting used to having losing trades, because let's be honest, you're going to be wrong about 50% of the time, depending on the win rate of your strategy. But let's say you've got a win rate of around about 50%. So that means half the time you're going to be having losing trades. If you've got no experience of trading, I guarantee you'll find that tough until you build experience. So yeah, someone without any experience would not be able to do it. No. Yeah, 500k is the goal. Yeah, that's the title of the presentation. So yeah. Do you mostly trade FX during the most active hours? Okay, open close of the currency pair. Carl, yeah, if I'm day trading, then I only trade during the most active hours, which are the London hours, really. So from any time from sort of 7:30, 8 o'clock in the morning through to sort of 4 o'clock in the afternoon, that would be the main window. I'm not sat here all the time, but that would be the time if I was going to be on the days when I'm day trading. Now, bear in mind, I have a live trading room, so part of my day, or most days, I am with other traders calling out trades in the trading room. So that euro-dollar trade that I mentioned earlier on that we took yesterday wasn't just me. I took that with other traders as well and live in our trading room. So yeah, those would be the hours. But outside of that, I will be placing swing trades, and I can place swing trades at any time of the day. Is the content of your courses the same as the way you trade now? D, yes it is. Good luck. I will keep watching you and your progress. Thank you, Yerkin. Right. Just come down. I need to probably go back up. If anyone's already asked a question and I've not answered it yet, it's because I've got to scroll back up and have a look. So just bear with me a little bit. I'm just making sure I'm not missing any questions that might be. So if you've got any questions, by all means fire them away while I'm scrolling back up. Okay, I've got a question here from Alan. A good question. Hopefully, he asked this a long time ago. It was about 50 minutes ago while I was doing the presentation, so I may have indirectly answered it, but I'll just call out this question anyway. The question reads, what's the purpose behind doing this public challenge? Your objective is very clear, 50k to 500k. However, can retail users follow your trades with their own objectives as per their account size? I think I covered it off during the presentation that what my objectives were to to indirectly help people with their own beliefs, to say by putting your own neck on the line, but also yes, people can follow my trades. They can come into our live trading room. So if you want to be a day trader, then come into our live trading room. That's where I trade live in front of you, so you can trade along with me. If you are a swing trader, then we have a swing trading package, and you can track my swing trades in there. So yes, you can. You're not going to see every single trade I take in the challenge, but you do get, whether you're a swing trader or a day trader, you will get to see plenty of my trades. So yes, you can. Okay, right, I've caught up on those, so I'm just going to scroll back down again now and see what else we've got here. So hold on a second, my little puppy is barking in the background at the moment. So, is the content of your courses the same as the way you oh, I've already answered that. Minimum deposit, would you recommend a prospective trader to have before trading? A prospective trader, so Charles, if you're brand new to trading, then I would say just put £1,000 into a trading account. And so just a small amount, and because whilst you're learning, whilst you're cutting your teeth, so to speak, just keep the account size fairly small, and you can have fun with that account whilst you're building your experience. Yeah, and then you can gradually grow it from there. Carl, you say you remembered me from the TV program years ago. Oh, good. Do you swing trade and day trade on the same account? Yes, I will be. It's all on this 50K account, Paul. I'm going to be doing all of my trading on the same account, yes. Do the institutional traders use fibs? Most of the time, no. Most of the time, no. Do your swing trades have targets and stops? Yes, I am a target-based trader. I'm not someone who just trails their stops Gardner and lets the trailing stop trade take them out. So no, I am a target-based trader. Yes, I identify technical targets which I run trades to. I always use stop losses. Yes, I'm a big advocate of using stop losses. I wholeheartedly disagree, should I say, with anyone who says that you shouldn't use stop losses. I think that's a very, very dangerous approach, and so so I totally disagree with people who don't use stops, because ultimately they get burnt at some point or other. Gordon, I've already gone through that question, but I use ETX Interactive Brokers as well for enough as well, and Saxo Bank. Right, Anise. Okay, Anise is saying Warren Buffett does not use stop losses. Yeah, that's a bit different. If you're trading unleveraged and you're just buying stocks, I don't have stop losses in my pension money, which is just running on the equity markets. No, you don't. We're talking about short-term trading here. You always have stop losses on your short-term trading. That's long-term investing. You don't have stop losses on investments, no. Because you don't need to, because they're unleveraged, so you don't need to do that. Okay, right, we are getting close to the end here of the questions. I'm not seeing any more coming through. There might be some people typing, but it looks like we're getting towards the end of the questions here.
Charlie, it's Simon here. Hi.
Yeah, hi.
Fantastic. How did you get the puppy to give you that alarm every hour it goes off?
The puppy?
I don't know if you remember the last time we did a webinar. After an hour, the puppy seems to come in and give you a few barks. It's almost like a four-legged alarm clock that you have there.
Well, Rachel's just come in. She came in about maybe 20 minutes ago, and so the dog's running around downstairs, and he's obviously got a bit of energy, and so for whatever reason, he's just decided to play. But yeah, it must just be bad luck. He's not usually much of a barker, actually, so I don't know what he was barking at. Okay, basically, I know what it was. We've got builders in at the moment. They're doing a project in our garden, and so there's like diggers out there and stuff. So he's gone out to the back doors, I suspect, in the kitchen, seen these diggers, and is thinking, "What the heck is that?" and started barking at it.
It just coincidentally was right on 8 o'clock. I thought, there we are.
Yeah.
Wasn't Charlie? That is fantastic. You've done very well tonight. Thank you very much indeed, and lots of great questions that have been coming in, which is really good. I know there's some more from Anise, but perhaps we can answer them offline. But I think you've done a tremendous job in presenting what it is you're doing and how you're going about it. It's a very systematic, mathematical sort of approach that you take, which is great. So I'm sure a lot of people here will look forward to following your challenge as you go forward with it from here. So thank you.
Yeah, I'm looking forward to it. I think I put myself on the line a little bit and think, oh yeah, I'm excited at the moment. But you'll speak to me in a few months' time, and I'll probably be saying, oh yeah, it's hard work this.
Well,
I've got to trade through the summer yet, but yeah, you do put these pressure on you. But I thrive on the pressure. So yeah, it's all part of
interesting to see how you make these changes with the markets, because obviously you said at the beginning of this presentation that the markets are quite different. There's a lot of different political scenarios now, so that does have an effect.
But
so thank you.
They're different. They're different, but at the same time, I look at what I've done so far this year. You find a way, and it's been a good year so far. Touch wood, it's been a good trading year. But it's just that what do I do this year that I was doing in 2013? Yeah, it's slightly different. There are nuances that you have to be able to adapt to. Yes.
Fantastic. Well, we will look forward to hopefully hearing from you again, and maybe you can pop into the round the clocks and give us a sort of a quick update and as well, which will be fantastic. But I think we'll let you go for now because you've had a big day, obviously.
It's been a long day.
Working your way around the golf.
I've got 4 guys about to arrive in about half an hour, because 4 friends are all going to walk in the door. It's like a bit like something out of The Hobbit, where the dwarves start knocking on the door and come bowling into the house, and that's what it's going to be like in about half an hour's time, as they all start turning up and wanting to be fed and watered before we get up at 6 o'clock in the morning to go to the the Goodwood Festive Speed. So yeah, it's a busy day. Yes.
Okay. Well, I'm not jealous. I'm not jealous at all. Have fun tomorrow. Listen, on behalf of us all, Charlie, thank you for coming, spending an hour with us. It's always appreciated, so thank you for that, giving up your time to do that, and thank you everybody that's been here on the presentation tonight. I hope you've enjoyed it, and we'll look forward to bringing you some more very shortly. So in the meantime, Charlie, thank you very much. I think we'll draw it to a close there and say good night.
Great stuff. Thanks, Simon.